It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, folks. Basil Chapman, Tuesday. Hey, that's unusual. Yep, I'm going to be here Monday, Tuesday, Wednesday, Thursday, and Friday, 11 o'clock till noon. And I am the advocate of the ChapmanWave methodology, the waveform that never sleeps. If you're looking at my charts, you'll see that they are constantly being notated. Basically, what I look for is the lowest low bar from which to start a buy signal, which can go to 4 higher peaks. At that point, other things can happen, but that's the concept. Very simple concept. We'll see it over and over and over. You can see it right here. The middle chart of the Dow, look at this. Went from a low bar of... I should have typed it in, 12,035. Oops, I've got these. This is the black chart, 12,035. Let me change the color of the ink. There they are, yellow. And it went peak A. This is the Dow weekly chart. The week of the 8th of June goes to peak A on the week of the 22nd of June to 12,898. Pulls back just a little bit. Breaks to a new recovery high at 12,961 on the week of the 6th, 1 week later. Pulls back for 1 week, starts a brand new leg up. That's leg C. That goes to 13,338 points below the previous major peak of peak E. That was the 1st of May. Pulls back for 2 days. 2 weeks, third week breaks out to leg D, and then what does it do? It goes to 13,653 the week of the 14th of September, and then it has a particular candle. For those of you who have done my ChapmanWave methodology Master Trader series, you know what we call that following candle. It's called a silent doji, and I spent about a year working on these different techniques. A bunch of new techniques, and in the workshop I gave and in the Master Trader series, I spent a lot of time talking about how in certain scans it's impossible to pick up something that misses a new high, goes to a new high, and then after that does something that is really important, either candle-wise or in the ChapmanWave price-wise, and that's what I call the silent candle, or the silent, in this case, doji, or the silent peak. So essentially what we're looking at is a peak D in the weekly chart. The stochastic still at 91%, and the MACD still very strong. They are both way underneath the highs that were made back in March to April to the May high, but they are still quite strong, and the monthly chart is still holding really well. Now, what I'd spoken about last week, for those of you, maybe you're listening, normally Kate Salter would be here, and Kate, of course, has moved on. And it's my pleasure to be taking this particular spot. I've been asked years ago if I could do it. I just needed those Tuesdays and Thursdays for just work that I had to do. I've managed to reorganize my schedule some, so I believe that this is going to be hopefully to all our benefit to be able to be here and show these charts. Now, that's the weekly chart. What's really important, using that same concept, is that in the monthly chart, there is an alternate wave count, and that says this is leg F. Now, what I mentioned last week was that if we make a new high somewhere like Thursday, and then we start to pull back, or even if we made it on Friday, if we have an immediate pullback on Monday, the first of the new month, we've got to watch real closely to see if the whole week there is no new high bar made to extend this leg up in the monthly charts. And it's really important. Why? Because there is a chance. I'm saying there is a chance. At this point, I have to wait for the evidence. But there is a chance that this peak that we may be making, if there's no new high above 13,653.24. Now you might chuckle, 0.24. Hey, I'm going to pull up the New York Stock Exchange, the NYA, which has 8,282. So even there was a penny difference. There was a peak that was made back at 8,520.27 in February of last year. It pulled back the next month, 8470.35 in March. And then what happened? May went to 8678.10, and then 8718.25 in May. Oops, that was April. Right, in May, and then extended to leg D, and then peak D at 8718, and it plunged 2,000 points to 64,114. And what happens at a peak D? That's where you've got to be most careful. What happened in the New York Stock Exchange Index when it made a peak D back in July of 2007 at 10,238.25? It pulled back and it squeaked to a new high of 10,387.17 peak E, and then plummeted 59%, 60% to 41.81. So that's how the technique works. If you go to the E-minis, I show my charts. I show my charts every day. I show the 120, where is it? Oh, you're right here. The 120-minute chart of the E-minis, a vehicle that I trade quite a bit. And I show the charts, and now I've started on the white background. I happen to not, I'm getting used to it. Let me just look at Tiger TV to see if you can, just how it comes out. It's a little delayed. It'll be there in another moment. I'm finding that the white chart, which is great for printing, because I want people to be printing these charts. I want you to be studying. I want you to be able to add your own techniques. I want the ChapmanWave to become part of your technique. I hate when people say to me, "Oh, I'm just using the ChapmanWave," because I say to myself, they cannot just be using the ChapmanWave. I'm not them. I've never done what they've done. Well, some things obviously I might have done, but they have their own techniques, their own emotions, their own the veracity of the techniques that they've developed up until now. I want the ChapmanWave to become part of your wave. So you can add Tom's technique, you can add Steve's technique, you can, you've got Dave's, you've got Larry Percival. I want this to be yours. In other words, you own it. I don't own it anymore. I've handed you the fishing rod. Baby, you're on your own. Not true. Anyone who sends me an email, I always answer immediately. So, yeah, in the den, Danny in Atlanta says, thanks for using the white charts. But I'm going to show something in a few minutes. Oh, there it is. Okay, yeah, you can see the letters. You can see everything that I'm looking at. I'm not sure that you can see the peaks and troughs as easily as I can. But you know what? That's the way it is for the moment. I'm going to try. I'm not migrating across to the white, although every time I get a new chart, I go to the white chart now first instead of the black charts. The black background, let me just explain something. There was a peak in the E-minis at a peak F. Remember, I talk about my waveform. The peak F, if the technicals are not confirming and it starts to slide from peak F at 1468 on the 14th of September, at 10:30, that's what happened. Then it went into a rectangle formation. I talk about these rectangle formations as being really important. They can last longer than your patience. Why do I say that? I can tell you from experience that I just couldn't tell you how many times I've done so well when I've shorted or sold the E-mini, and it pulled back and it did exactly what I wanted, and then I get a little impatient. That's another reason why I wanted to pick up the Thursdays, because it's forcing me, and I've been practicing and training for, like you train for sports. I've been practicing and training for, I wouldn't say weeks, I think it's probably months now, to develop the patience not to trade when I identify a rectangle formation. And I'll explain why. Well, now let me put it this way. Not to trade what I think will be the breakout to the downside or the upside. Why? Because as soon as you identify a rectangle formation, and this is something I love to teach in my Master Trader series, and I've taught it for years. I haven't been disciplined enough to actually obey my own rules. Now I'm doing that. And what I do is that when the price goes to the outer end of a rectangle formation, instead of, great, it's going to break out, that's where I implement a short with a tight stop based on the formation of the rectangle, based on certain criteria on the outer ends of candles. When it comes to the bottom, I don't short, I buy, because there's going to be a moment where I'm totally wrong. But in the meantime, you can really do some very nice, you can make some nice money. In fact, you could make as much money sideways as you can in a straight line move. Now, what I've got is another peak D that was made. We pulled back down to 1424, retested in this grayish area at 1427. It's kind of greenish. And then it bounced to a peak D and has pulled back. And now we're at a very critical level in the E-mini. I suspect we've got a little bit more of sideways trading. But based on that, this is a waveform that works in every time frame. Look at the 10-minute chart. Well, let me look at the 5, because 5 comes before 10. It went to a right arm extension to a peak G right at the 1446 level, round number high. That was just at 20 to 7 this morning. And the E-mini then pulled back sharply in this arch formation. And look at the 10-minute chart, how beautiful this is. Left side, right side, price time match. It extended a little bit. It's been positive so far because it didn't close underneath the 1436.75 level, bouncing nicely. And that's what I'm saying. Individual stocks. Now, someone in the den just mentioned CMG is tanking. Well, CMG is a stock that we've made a great deal of money, over 90-something points, 85 points in one particular session, and it was on my list CMG, and it was on my list even today as to re-enter as a short. I didn't get it. I wanted to pop up. It didn't get there. And look at this. It is plunging. It is going right down after a peak D. Now, here's another technique that I developed years ago, and I showed this to subscribers, that there's what I call a silent phantom peak. It's phantom because in the ChapmanWave you expect a D. But if all the requirements of getting there are met at a peak C, and there was a bar that just before that or before that could have been used as a peak, but it had parallel highs and the third bar went higher, I use that. Specifically. And I did that, and we identified it. So we had the peak D at 351.80. I made a mistake the other day. Periodically, there's just so much I'm doing. I'm trying to cut back on that and do less and give more. And that was, I wanted to short, and I mistyped the entry point. I wanted to short at 327.40. I believe that was the price. 337.40, and that I think was on the 24th of September. I jumbled the numbers so nobody could have got the trade. It was just perfect. It went to 342.97, which would have been within the parameters that I gave for a buy stop. And that would have been perfect. Well, you can't cry over spilt milk or a sliding stock. That's the way it is. But it's the techniques that you develop that are so important. We'll go through all the numbers in a minute. The Dow right now is down 35, but the S&P is up 42 cents, and the comp index is up 7. Basil Chapman, 877-927-6648. Love to take your calls.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. This is the Tiger Technicians Hour here Monday through Friday, 11 o'clock till 12. I'm looking at all the papers on my desk. There's a chunk of stuff I wanted to go through. The one paper I just grabbed is the Boston Globe G section. There's a woman, an author, she's now 75 years old. She lives here in Cambridge, Mass., and she has another place somewhere else. She wrote a book in 1993 called The Giver. I was unaware of it, but I was given it to read by my daughter-in-law, and who was acting as a one-person in a one-person show around the country. Basically, it's for 8th graders around the country, but adults are invited to come to the shows. And it's to discuss this book, and it's a very interesting book. Certainly not my kind of material I like, but evidently, without The Giver, there would be no Hunger Games trilogy by Suzanne Collins or Match series by Ali Condi. Anyway, I read the article. It's a very nice article. It's a way of thinking, and I was fascinated by the book. My wife couldn't stand it. I thought it was really very interesting. Just a way of thinking. Totally disagree with it, but that's just it's very interesting. And it turns out that my daughter-in-law will be performing it right here in the Boston area at Bentley University sometime in November. So, right, now we're looking at CMG, which is Chipotle Mexican Grill. Major sell signal at that peak F top in the ChapmanWave with a doji candle right there. It opens at round number 417, goes to 442.40, and plunges down to a low of 277.26. Bounces up above the 9-period moving average to 351.80, and is now trading down 20 points to 296. There is a problem. And the problem is that they might be, I've just never been. I don't like spicy stuff. So, but people love it. It's just about everyone I've ever spoken to loves it. So what will happen is I believe it should come down. The candle that's really important would be the low of 260 from the April low, that candle. But the real area of support will be between 262 and 212, and that's a very ugly candle of December 2010. Someone says that I don't get CMG, nothing spectacular. Well, I can't even talk about it. I can talk about the stock. And stock looks on the near term that it's going to test the low of 283 made on the 4th of September. So I wanted to do a couple of things since some of you might be tuning and expecting Kate to be here. I'm just trying to think of a stock. Let's see, let me just go to BECN. I know she spoke about it because the stock that we had in my opening call, BECN. Beacon Roofing Supply Company. I'm going to do this one. I think I've done it in white. Let me just double check. BECN. Yeah, I've done it in white. Okay, look at this. Beacon Roofing Supply Company. Just a non-entity. Who even thought about the stock? It still came up on my screen one day, and it just looked really positive. It made a high back in it's an IPO back in September of 2004, round number 11 high, 950 low. It spirals up peak A, B, C, D, E. It goes to peak F at 28.97, May of 2006, and then plunges to 670 in the monthly chart. Then it starts a very steady stair-step move. Now, I have to emphasize this. Yeah, thank you, Mike, NSM. I'm going to look at that as well. I remember she's spoken a lot about that. What happened was at 670, the stochastic and the MACD, that's these technical tools right here. You see the stochastic starts to rise. The MACD gives a beautiful, with a wide beta between the 9-period differential and the red line, the slow-moving average. In the ChapmanWave, it says I can get you to a peak D. I can even go higher. But I'm not the stock. I can only show you the highs that you are going to count, the higher peaks and the lower troughs. The waveform that never sleeps. Because of that, to trade Beacon, and we had this problem, we got in at a very nice price, had a little bit of a profit, and it pulled back, and I can't remember, I think we made a little bit of money, or we just lost a tiny bit of money. I have fairly tight stops. It either works right away or it doesn't. And then so look what happens. It goes from 670 all the way to 18.74. That's almost a threefold increase. Then it pulls back to $9. That is a 50% decline, more. But then it goes back up and it goes even higher, and it goes to 23.11, and then it pulls all the way back down to 13.52. So the ABCD gets you to the D. It even gets you to an E and a bit wide, long-legged F. I'll talk about that in other sessions about the wide doji. And then what happens? It stalls at that peak F. But look, holding it, you would have had to say, I'm buying this for the long term. I don't care what. And you hold it. And that's it. And when it gets above the 28.97 left side, peak F of May of 2006, that's where you have to have caution. That's where we've got it. And I'll talk a little more about it as soon as we get back. Basil Chapman, 877-927-6648. Hey, I'd love to hear your calls.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, folks, I keep getting emails from people. Some people say, I love the black charts. Others say, I got an email here from someone in the United Kingdom saying, hi, Basil, loving the 5 days a week thing. Also love the white charts. But one thing you may or not want to try, when I'm using white background, I use red and green candles rather than black outline. I find it easier to see the peaks because the contrast is better on my charts. Just thought I'd mention it as your current setup isn't working as well as you'd like. Well, let me do this. I'm going to show you something. When I go to when I change, I don't see the dojis very well. When I go to the style, when I go to candlesticks, which I usually do with green and red and black, you'll see. Look, I would like if I could outline the candles, the body of the candles with black. Then it would be clearer. I suppose I could do it. Yeah, I can tell what you're looking at. Let me see as it comes up here on the chart. I'm just trying to find a way of doing it. Doesn't really matter to me. But I don't want to miss any candles. So, you know what, we'll keep the weekly up in red and green. We'll have the black and white ones here. Well, that's the thing. The candles get a little squashed here, so you can't really see the tips, the wicks. So, okay, now let's do this. It's really important when you're looking at a stock like the weekly. So we've got a left side, right side price. Time match, we went to a wide doji, and what that wide doji says in the monthly chart, regardless of whether you go above 30.80 the high, or you go underneath 26.19, the 9-period exponential moving average, there will be an attempt to hit that candle, the middle of the candle, that's right at the 28.30 area, at some point in the next month or two, as I say, regardless of whether it goes higher or slow. That's saying you've got a magnet at the 38.50 area. Right, now look at the weekly chart. The weekly says, I'm in a beautiful up channel. Don't mess around with me. There's nothing yet to worry about. If I broke underneath this particular color right here, oh, that was the other thing. There was too much red when I did this. Anyway, so if I break underneath, this is BECM, Beacon Roofing Supply Inc. If I close underneath 25.50, that's not going to be very good. But if I hold inside here using the ChapmanWave inside track, I will hold, and I'll be able to bounce in this channel like a little go-kart between the upper and lower area, and that'll be green, and that'll be red. Now, I don't like to have too much going on because I'm used to it, but I know that a lot of people aren't. So you will just see that when the price got into this inside track, it got reversed. When it got into the inside track at the bottom, it was a buy signal. So if it breaks under it, that's a failure. So that's the weekly chart. The weekly chart goes back to, that's all it goes back to. So now let's go to the daily. And let me just check. Yeah, I can see the green and red is fine. Looking good in the Tiger TV. Now look at this. Peak A. Let me just squeeze this. You've got two successive buy modes from the 200-period exponential moving average back at 22.55 on the 5th of June. It goes peak A, B, C, D. Plop after 28, round number high on the 18th of August. July, it pulls back where? To the 200-period moving average. It goes to 23.42 and starts a brand new buy mode. Goes to D, holds the 9-period moving average. That's that purple line, mauve line. And it goes to the high of E at 30, round number 30. 30 was the low, round number low, and 30.80 was the high. That round number low 30 says that Beacon should stay underneath 30, and if it ever closes above 30 for 2 out of 3 sessions, it'll retest the 30.80 area, might even be in a new buy mode. But up until then, be careful because it needs to digest these huge gains. In the den, Zital says, description, Beacon Roofing Supply, distributor of residential and non-residential roofing materials in the United States and Canada. So now what I'm going to do is this. I'm going to go periodically, I'm just going to go through these in much greater detail. My subscribers know exactly what detail I go through in my opening call. We're going to go straight to John in Philly. Hi, John, how are you?
Basil, thanks for doing this Tuesday show. I was surprised when I saw you up in the queue, and I thought, gosh, is it Wednesday already? I must be losing my mind, but it's not
You are
Tuesday.
losing your mind. It is Wednesday. What do you think? Yes.
Excellent.
You have a question. What is the question?
Yes, on the Dow Jones Monthly, Basil, you just went through in your overview how you have leg F in the Dow Monthly chart.
Correct.
Basil, I remember distinctly back in 2007. 2007. I recall this. Dow was making leg F into October of that year, 2007.
Correct.
And I recall somewhere right around the end of the year, there was a decline in November, a bounce, and then there was a relatively, it's a quote-unquote weak monthly close, December of 2007. And I recall at that time you mentioning to listeners and subscribers how you had a leg F turned into a peak F. The week close was turning your indicators negative. I remember you mentioning the significance of a monthly close under like a 9 EMA.
The 9-period moving average, yep.
So I remember all that, and now I'm looking at leg F here. And my question is there any set of circumstances that you're focusing in on now that might lead you to conclude a major top and some sort of significant decline is highly likely? So do you see parameters setting up that you're looking for, or are you kind of playing a waiting game for the market to give you more info on this leg F phenomenon?
you've brought the question up. It was a question I was hoping to avoid because I wanted to do, and I'm still going to do it, some kind of a paper for my subscribers. I'm going to give some clues as to what I'm looking at. And first of all, for me, you know what I do. I go step by step. There's no way that I will say that the Dow, right at this moment, the Dow is going to test 12,035, the low of June, the most important low, because if it breaks under that, it's going to go a lot lower. I'm not going to say that, but I'm going to say if. Why? Because none of us knows for absolutely sure. So I have to presuppose that there are conditions that, if met, will very quickly be able to give the kind of information to answer a question like yours. So I'll put this in the speculative box, and what I will say to you is this. The monthly chart cannot by itself give a sell signal. Why? Because I always talk about time frames. That means that you would go from a leg F in the monthly and say, aha, this is the moment of very great importance. Why? Because if the weekly is in a leg D or higher, and the daily is in a leg D or higher, there is a potential for a hat-trick top. What is a hat-trick top? It means now you go back. In my buy signal, when I got that major buy signal on March the 6th, 2009.
Yes.
At 66.49 or 66.50 on the diamonds where we went long, I anticipated the dreaded H shape because that would be the normal thing that you would expect. You got it in October to March of 2002 to 2003. You didn't get it in the semiconductor index, and you didn't get it. There was a divergence between many of the indexes, but that H pattern is invariably what you would look at after a major turn down, unless you get a V-shaped pattern. Well, what happened is the daily strengthened and strengthened, and to my surprise, the weekly was strengthening, and then to my absolute astonishment, the monthly was strengthening. And I'm a chartist, so I had to set aside everything and keep recalling the chart from 1932 to 1937-38, where the Dow went up fivefold from 42 to 196, I think it was, 193. Well, and the news during the Depression, you can go to the New York Times, just pick any day you want, any day of the week or the year, all the way through, and it was just horrendous news, day in and day out. And yet the price, people who bought at that particular time made 5, 4, 3, or 2, double their money. So I'm trying to say that when we look at the beginning of a move, you get a hat-trick bottom, like the dollar back in 1995, a hat-trick bottom, going to the daily, then the weekly strength, and the monthly, all the way to 120 on the UUP index, on the dollar index. Well, on the way down, you got a hat-trick top, but it could only start when the daily gave you a severe decline, leading to weakness in the weekly chart, and eventually you get your peak F breaking under very important left side support levels. So given that, let me explain what I'd be looking at. First of all, I'm not sure that with the Fed in the background, we could be looking at a crash scenario unless there is a suggestion by the market that the market wants to ignore everything that's going on. So the Dow, I'll give you the parameters right now. A close below 13,200 in the next week or two says be careful, because 12,977, 13,000 to 12,977 would be the next level of support. Any break above 13,653 has to hold, because there's an up channel resistance that can go, or it depends when it is, but it goes all the way to 13,790 to 13,900. Those are the parameters to look for. The weekly chart we will deal with when the time comes, but this is leg D going to peak D with a silent doji the week of the 21st of September.
Yeah.
And we've gone below it. But this is not the bar that counts. It is the close on Friday, this Friday afternoon, 4 o'clock, in the Dow. If it breaks under 13,333, we've got to be careful. Now, I'm going to just do a couple of quick things because it's a great question. I'm going to just touch certain areas. I'm going to give a much more detailed report to subscribers. But this is what I'm doing. Look at the RTH. This is the real estate Market Vectors Retail Index, and it has gone to a leg D. It has gone to all-time highs in the greatest recession since the Great Depression, which is absolute nonsense because anybody who lived through 1982 to 83 knows what a real recession is like. Anybody who lived through 1990 or the crash of 1987. So this is just political jargon. What's happened is discretionary money has gone into areas it never goes into in major recessions or even mini recessions. It's gone into try to get, I'm sure in Philadelphia, can you get into any restaurant on a Saturday or even a weeknight without standing in line just about? People are spending money. People who have jobs are spending money. So what we're looking at here is that the retail index, if that breaks, it's at 44.86. It made a high of, it made a high of 45.71. This is the monthly chart. Mm-hmm. If it breaks and goes decisively into the 40. Now, let me just, before I tell you the number, there are some people that are looking at the Dow, the general market, breaking out and soaring from here. And then there's a whole school that are looking for, and I can't believe it's going to happen because the press has never, in the 30-something year more that I've been in the market, have they ever got it right? And the banks never get it right, and the politicians never get it right because they're always sitting in the caboose, and they wait for the see where the smoke comes out of the chimney on the engine, and when it stops at the station, they run out and say, the smoke is going that way. So what I would say is, if that retail index really breaks into the 46 to 47 area in the next 2 weeks, I'll have to say, you know what, we could go higher, but this thing is extremely extended. And my reading of the economy, this is all the stuff that's in the back of my head, yes, says that we are actually going through a period of slowness right now. It isn't showing up, but my sniffer, my nose is telling me that we're about to hit a kind of a patch, a soft patch coming up, and that could be coming very soon. Why? If you look at the action of Ford and General Motors,
indeed,
why is Ford breaking down at 9.76? Why is General Motors, even though Chrysler came out with very good earnings, and I see a lot of Jeeps around, look, General Motors can't get out of its own way. Now, if you look at a stock like AZO, which is the retail, the AutoZone is AZO is the symbol, making car and truck or selling car and truck parts, they've made a peak E-top in the monthly chart. They have not broken down. But if I've been saying when the retail stocks and the truck and car parts start to break down, if you don't see money flow immediately into the Ford and General Motors into new car sales, that will be a sign to say, whoa, be careful. So if you don't mind holding, I'll sum it up when we get back. Do you mind holding?
Thank you.
Okay, we'll be back with John and Philly. Great question. Never expected it today, but I think it's worth looking at. I know exactly what I want to look at, and I'll explain to John the parameters that we were looking at in bonds, etc.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, Then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. John, you still there?
I am, Basil. Thank you.
Okay, now let me do this. I'm going to do a bunch of things. So I spoke about the retail index, etc., etc. The volatility index is very important. I'll get to that in a moment. I got an email from someone just moments ago saying, how about doing IWM in memory of Kate's show, The Logical Memorial? Thanks, really cool you're doing 5 days a week. Well, let's do that. The IWM monthly has made a cup and a double handle. I call it a double cup formation. You can call it a cup and handle pattern if you want to do it in one fell swoop. But I'm calling it right now. It's got this little double cup. If IWM, the iShares, the Russell 2000 index, it's triple topping right now. It's almost quadruple topping because 85.20 was the high in July of 2007. And just to remind you, you're absolutely correct. What I said is if in December of 2007, if the Dow closes under the 9 EMA, we're going to be in a down market. I did not think it was a bear market the size that it was, but that was the reasoning that we'd have a negative market. So now let's go back to this. If I had to draw, I'll do it here because it will show up nicely. Gray, just a gray resistance area. That gray patch, like a cloud, until the IWM is able to spike it to the 89 area, maybe even 91. this is going to be resistance, and I have to watch it as resistance. So it's going to tell me what's going on. The fact that it made an all-time high, well, I don't have it going back to 2000, just the end of 2000. It's very important. It made a peak, possible peak F or B in the weekly, but a peak F top in the daily. Now, let's do something else. In my look at the bonds, and you remember I had spoken about two things. One is the volatility index but underneath 20, especially in the teens, gives buying pressure. The other, and so as long as the volatility index of VIX remains under 20, buying pressure is there, but I think going to the 19s will start a push down. But there is from October the 19th, 1987, there was a low, a 24-year low, it's more now, 25-year low in the up channel bull market. That was the low, but the real bull market channel started back in 1993. That has been broken to the upside. So this is a 25-year bull market. Who's ever heard of a 25-year bull market? But when you get the Fed coming in to say, we are going to push money out as much as we can. We want to buoy the stock market. We want you to feel better and wealthier. At the same time, as you got this this riding against the 1%ers. And tomorrow I'm going to talk politics. I was asked in the den what my thinking is. I hope someone reminds me. I want to talk about politics. I want to talk about facial expressions tomorrow night, how important they are, way more important than anything else, facial expressions. And I also want to talk about the bull market in bonds, that I have an alternate wave count E or C, and the MACD's turning down, but it hasn't turned negative. And the stochastic's been way up in the 90s, and now it's 89%. It's starting to turn down. What will keep bonds higher if it isn't the Fed? That's a really big question. So you got the numbers that I'm looking at in the Dow. You got the numbers on bonds, because if bonds break above the high, this is the continuous contract, gets smoothed out above 154, that'll be leg D, and they can go higher. That's the Japanization of our bond funds, our bond yields, which I've been talking about for 10, 12 years, and the volatility index. Those are really important. Besides which, I don't know if you've ever seen, I don't remember seeing it as much as I've seen it in the last 4 or 5 trading days. Every day, the Dow is way stronger than the S&P, or the S&P is way stronger than the Dow. So
yes,
you've
I've
got
been noticing that. What do you make of that?
I make of it this way. You remember I talked about the bifurcation of the market? There are some really good stocks, and those stocks are saying, we want to hold up a little longer, but the other stocks are pulling back, and fewer stocks are participating now on the upside. Hey, great call. Thank you, John. Tomorrow I'll be talking a little bit more about this. I appreciate the call. Folks, I'm here 5 days a week, 11 till 12. I'll figure out what charts I'm going to use with the background. I happen to like the black background still. All right, I'll be back on Wednesday. Stay tuned for the Option Hour, and great program all the way through the day.